Oh my God, we're live. Hey, everybody, welcome to the green room of DisrupTV. I'm here with my amazing co-host, co-founder, Bala Afshar. And of course, we have our guest producer today. So Hannah, thanks for being on the show. And of course, our wonderful guests. Like in DisrupTV tradition, we introduce our guests in reverse order of appearance. Eric, where are you coming in from? What are we talking about today?
Hey, I am calling in from the Bay Area, and we are talking about my new book, Incorruptible.
An amazing book. We will get to that, the details, second part of the show. Bruce, welcome. I hear you got a new home. What's going on? Where are you, and what are we going to be talking about?
Up in Bend, Oregon, beautiful Bend, Oregon, and we're going to talk about market engineering.
Market engineering. Hey, one of my good friends, Mark Smith, is up there. If you know him, Ventana Research founder.
I sure do. Yeah, they have a place. Actually, his wife and I created a company today that's a $50 million company. I was a CEO and founder of. Nobody wanted to invest in it, and turns out I was right. They were wrong.
Well, good to know. Well, let's kick off the show. Hannah, please do the count and we'll go live.
Okay, 3, 2, 1.
Hello and welcome. Thank you for joining us on DisrupTV. My name is Vala Afshar. I'm the Chief Evangelist at Salesforce and your co-host for the next hour. We welcome you to follow us on X at DisrupTV Show. Send Ray, myself, our distinguished guests, your questions live. We'll do our best to answer them. It's my pleasure to introduce my co-host, Ray Wong. He's the CEO, founder of Constellation Research. He's the best-selling author of Everybody Wants to Rule the World. And I see him just about every day on TV, Bloomberg, Fox Business, CNBC this week. He's one of the top futurists on X at RWANG0. Welcome, Mr. Wong, to DisrupTV.
Hey, thanks a lot, Bala Afshar. He is the Chief Evangelist for Salesforce. He's also the author of multiple books, including Boundless and Autonomous. These are #1 sellers on Amazon, and I do need to carry them around with me more often. Executives around the world often pay attention to his innovative and inspirational tweets. And when he's not keynoting, leading, and talking about the topics of the day from AI to transformation, you can catch him on business TV outlets such as Bloomberg, ABC, and more importantly, you can read about even these shows and episodes and his insights on ZDNet. But it's not about us. It's about amazing people in the industry, people who love their craft. Who do we have to kick it off today?
Books that you should always have with you, just as an FYI, Ray. We're here with Bruce Cleveland, author of Market Engineering. Book was officially launched this week. I think
That's
Monday,
right.
June 2nd.
Yeah.
And easy to get to on Amazon. Bruce is CEO of Traction Gap Partners and former general partner at Interest West Partners and Wildcat Venture Partners. An early investor in Doximity, Velocity, Marketo. Bruce previously held senior executive roles at Siebel Systems, Apple, Oracle, C3 AI, helping to launch the CRM, enterprise cloud, and enterprise AI categories. Bruce authored Traversing the Traction Gap and most recently Market Engineering, because markets don't build themselves, a practical guide to creating, positioning, and leading new market categories. Market engineering is the playbook for founders, executives, and boards who want their companies to lead, not follow. Welcome, Bruce, to DisrupTV, and congratulations on a brand new book.
Hey, thanks, guys. I much appreciate it.
We're super excited to talk to you. We were just in the green room talking about how the VC dynamics have changed, and startups are very different, and they need different types of different types of funding, or maybe no funding at all, depending on how they're operating. And then the whole view of the old world of inbound has completely changed, right? And this is really the essence of where the book is. So what is market engineering, and why should people care?
Yeah, well, I think you're raising a good point, which is that, yes, the industry has changed. I think it's clear. Obviously, AI has completely turned a lot of things on its ear. For the first, when we think about VC, originally, we needed a lot of venture capital in order just to acquire the developers that we needed to build the tech. Yep. And that's no longer really the case. We can have, you talked about some folks who, have done well without any venture capital. Most of my clients today have just a few developers. More of the effort is really on go-to-market. So what is market engineering? Well, it's a term I coined in my first book to mean 5 different things. The first is category design or redesign. The next is positioning, messaging, storytelling. And if you can do all those things well, thought leadership inures to you. So those are the 5 tenets of market engineering. And in my first book, while I introduced it, I knew that a second book was going to be needed to really explain how this works. And so why is that important? It's because product engineering, especially now, is just table stakes. What really distinguishes companies, the winners from the rest, are those 5 tenets of market engineering. If I look back on my career at Oracle, when we were a small, tiny little startup on Sand Hill, what distinguished us? It was really our ability to change the way that people thought about how databases would operate. When I think about Siebel Systems, Tom's vision, for CRM, which is a category that we created, and Mark Benioff at Salesforce built cloud CRM. We had enterprise CRM. When I take a look at all the winners, all of those people have some things in common. They created or redefined a category. They positioned themselves through language and unique thoughts to becoming the thought leader in the category. And if you've read Play Bigger by Christopher Lochhead, you'll realize that 76% of all the profits of a particular category inure to that leader. So why would you want to be anything else? So market engineering, to me, great product engineering, table stakes. Market engineering will distinguish the winners, and even more so in the AI era, when product is relatively easy to create and go-to-market is not. So it's still a human factor, still a human in the loop game. And so I wrote the book. I always knew that it was going to be something that would have to come out of the first. And so I finally got the time to do that. So here it is.
That's awesome. Jeffrey Moore, Crossing the Chasm, he's been advising Salesforce for years. And Jeff, he wrote the foreword for the book, and the foreword concludes, my recommendation is not simply to read market engineering, but put it into work. Make its tenet part of your operating rhythm. I like rhythm. Bring them into your boardroom and executive leadership discussions. Market leadership is no accident. Leadership is made, not born. So incredible words from Jeffrey. How do companies do market engineering? Can you give us some practical guidelines in terms of how CEOs or entrepreneurs who are watching the show can start by reading the book, but then start applying your principles in action?
So there's a couple of things that I'll address them. So the first is we have to first recognize that there are great market engineers. They don't call themselves that, but it was my observation. Who are those people? Mark Benioff, Tom Siebel, Scott McNealy. The people who, and probably the finest one of all was Steve Jobs. It's the ability to change our perception of reality, that if we use certain set of products, that it will transform the way that we operate our business. And so the process of market engineering itself, using these 5 different tenets, category design or redesign, positioning, messaging, storytelling, and thought leadership, the companies that do this best, I would say, are innate market engineers. They listened, learned, they understand how to transform what we're thinking about or the way that the world in which we work works. and give us a new idea for how the world might work. You know, take a look at Salesforce, what they're doing with agentic computing, this headless computing, right? You would think, hey, with the SaaSpocalypse that we just went through, that Salesforce was down and out, and because it was entirely a seat-based model. Well, that's absolutely not true. I mean, I even said that when all this was happening, it was a good time to buy Salesforce stock. So ServiceNow, I mean, everything got, 50% haircuts, right, or more. Look what happened last week, right? We've got now back up and into the right, and this is pretty predictable. What I learned is that from these companies, these CEOs, they figured out a way to explain to others in what Tom would call in crayon, what they were doing wrong and how they could do something different and be successful with it. And there are people who are just really good at this. And so the reason I wrote the book is because most are not. I think that they, especially in the technology industries, anything that requires building a new product or innovation, these are more technical people, and they're not always ones that want to be in the limelight. They don't want to necessarily, they don't want to take the risk of saying something that makes them seem, or that other people would say you're an idiot. That's what happened to Mark, by the way. If we go back to 1999, when he said, hey, there's this new utility internet-based computing thing, CIOs said, you're crazy. That's never going to work, right? And you have to be willing to take those arrows, and not everybody has the skin to do that. Remember, if you're really technical, you probably were a good math student. You're probably good in science, steeped in facts, not fiction. You probably weren't the person leading the prom for, whatever. The point is that a lot of those people don't want to be in the limelight like that, because you're going to take a lot of, I just think about anything new. Uber, Lyft, never going to work. Airbnb, never going to work, right? Terrible idea. All the VCs will have told you that, except the final ones that might have invested. So my view of it is that market engineering is a skill. As much as we learn product engineering, which is a technical skill, market engineering is a technical skill. I combine those two words together specifically, although it seems like an oxymoron. Yeah. I combine them because it is a process. You can do it. There is a way, and I explain it. The book is basically an instruction manual for how to engineer markets, and that's why I wrote it. I also built a bunch of my own application software that helps you use it. So you read the book as the instruction manual, and then you can go to the Market Engineering Virtual Studio, and you can build the artifacts that I talk about in the book, the blueprint, the matrix, these things. And then it pushes out into investor deck, sales deck, and a variety of other things that I wrote personally. I didn't delegate that. I used to be a developer a long, long time ago. And I said, hey, if you're going to talk about this AI stuff, you better know what the hell you're doing. So I went and I built these applications. So now you can activate, for the first time, a business book into actual output. And I think that's something new. And I don't think I'm going to be the only one. I would imagine that Eric, that you're going to have on a little bit, and others already probably have similar ideas. So so I combine those two things together, and I'm excited for people to use it.
It's incredible. I like the way you did TGF, and I think that's awesome. And as you're talking about this, I realize that so many people only do like one or two of these things, from category design to positioning to messaging to storytelling to thought leadership. Like, they only do a few of these things. They don't do them all at the same time, which is they have this big traction gap. So talk about TGF, like that traction gap framework.
Yeah. So the first book,
because I think it's like the core of everything here.
So the first book I wrote in a horrible decision, because Jeffrey Moore was an operating partner in our venture firm. And I brought these ideas with me when we built the firm, Wildcat Venture Partners. And I was having success as a very early stage investor, which means it was just an idea. Marketo was just an idea when I invested in the team. No product, no revenue, no customers, maybe a dog. I don't know. That could have been there. But I wrote this because I was having success at that early stage when most companies were PowerPoint companies, not spreadsheet companies, where most venture capital firms like to operate. Not all of them, but many will only invest once they see traction. So there was I wanted to expose what is it that the venture capitalists are thinking when you're sitting across the table from them and you're presenting your idea, your company, whatever, and how can you convince them to invest in you? And so the framework is really a very simple concept. There's 3 phases. There's a go-to-product phase, there's a go-to-market phase, and a go-to-scale phase. And you're going to go through those, whether you're an enterprise team building a new product inside of a large company, or you're a startup that is building a new company of one product. So I created a couple of, I didn't want to write a Michael Porter competitive intelligence tome that nobody was going to read unless they were an HBS, grad student. So I wanted something that was more like Who Moved the Cheese? So something easier to get your arms around.
Was clear.
Yeah. So this framework was basically a way for you as an entrepreneur to say, well, where are we? There's no instruction manual for your startup. There's no school that you can really go to. Yeah, there's some accelerators and those things, and they're useful, but there's really nothing that says, okay, you're here, do this. You're here, do that. And that your focus needs to change based upon those phases. So I wrote this as an observer of amazing people like Benioff and Siebel and McNeely, all people, and Ellison, people who I worked with or for, watching how they played the game.
Legendary marketers like Mark Jarvis, for example.
Yeah. I mean, I just think the problem is that you go to college and you study marketing and communications, and then they're still teaching the 4 Ps.
I know.
Okay, great, that's super, but not that helpful. No one's going to employ you for that. So I wrote this book because I wanted to really help. I wanted to change the trajectory of these 85% plus failure rates of VC backed, the best startups. That's B2B. B2C, 96% failure rates. It's not good. And by the way, since I wrote the book in 2019, those numbers haven't changed, not a lot. So I wrote the book. The framework was to give people kind of a directory. Like if you're in the middle of a mall and you go, you are here, and to help you go from wherever that is to scaling your company. So I wrote that, and lo and behold, the only problem I had was I used it as a marketing device for Wildcat Venture Partners, and that was on the front of the book because we underwrote it. Well, it didn't get highly adopted by the VC community. Gee, I wonder why.
why.
So who's going to say, hey, you should go read Cleveland's book? No, they weren't going to do that. So, by the way, that's stripped off of the book now because I own all the IP. But the fact was, I got invited to Stanford, Harvard, Wharton, and Columbia, and it became kind of this underground alternate reading list, for a lot of these students of those programs. And I still go to Stanford and Columbia now. I just did Stanford a month or so ago, where I go in and lecture on the book and now the new book. So the first one was really this roadmap of how to go from ideation to scale.
Sure.
And the second book, this market engineering book, is really the vehicle. So how do you do that? I mean, think about it. You said it for yourself, right? There are individual books that and I say it in the book. People have written books about storytelling. The Moth is a good one. They've written books about category design. My buddy Christopher wrote Play Bigger, right? These are not new things. What I wanted to show was, hey, it's a recipe. The short order cook at Denny's uses meat, flour, beef, whatever. But I would argue that the chef at the 4-star Michelin restaurant uses similar ingredients. And it's a whole different experience, right? And so I wanted to show people how you could, an instruction manual for how to engineer a market using those 5 ingredients simultaneously to generate something of value for their company, and not just to leave it in, as happenstance or luck, but to actually know that there is a prescribed process to do it. The book explains it. And I think that's, so far the reports back are that I didn't make too much of a mistake.
No.
Between Jake Steiner and Ariana is what we're saying.
So you're baking the cake. The cake has flour and sugar and eggs, and like you said, ingredients are pretty much the same, even if you're at a Michelin star or your
Ariana's versus Jake Steiner for Ben.
Yeah,
exactly. But whose kitchen is it? Is it the CMO's kitchen? Who owns market engineering?
Well, that's a great question, because that's one of the things that I think I was worried about with the book. I think that you see the word market and then you're passing the book to your CMO.
Right. No.
And actually, it's not marketing engineering, it's market engineering. And it's really the CEO or the executive leader in a product division who owns this, because they have the span of control of resources across sales, marketing, service support, whatever, finance, to be able to mix and match what's needed to engineer that market. So the truth is, I wrote the book. The ICP, the ideal customer profile, is a CEO of a startup or a large company or a enterprise product team. The CMO is involved, kind of like the chicken's involved in the breakfast. The pig is committed. But the CEO, the CEO owns this, and I think if you take a look at Mark's Benioff or Tom Siebel or these executives of these large successful companies, I think you would say, if you look across those tenets I talked about, they were and are actively involved in manipulating all of that. The CMO has to do execution work to help. So does the CRO and the CFO and the EIEIO. But all of those the CEO owns this. And I think this is a big problem. I listen to companies going, well, the CMO owns the demand gen and all this other stuff. I'm going, no. The CEO owns this. The CMO can help you get stuff done. Sure. But you should not be delegating this to purely, and the poor CMO who is left having to do this, they have, I think that's why the tenure is only 18 to 24 months.
It is. It's literally 2 years or less.
Yeah. It's, and I think we have it all wrong. I think, the CEO needs to lead it.
Your formula is actually right. The summation of category design, market validation, and orchestrated go-to-market is market engineering. And I think that is a new role in itself, but it's founder CEO. Every founder CEO should be reading this book if they haven't. And so when we look at market engineering and we take this, to the next level, we're talking about creating TAM out of nothing. It's almost as if the PE firm should be reading this and actually figuring out how to take their assets and then turn it around to actually do value creation instead of value destruction. What do you think?
Yeah, I think you just raised a really good point. So PE is always about, they've always had to go in and do enormous technical due diligence, right? They spend all of their effort on that. And then, then they get rid of, half the people who actually know any.
No, they say, you're working on 24 products, but imagine if you can invest more in 12. And by the way, just cut your budget in half.
Exactly. Today, I think with AI, I'd be less concerned about the tech. You could basically, in a very short amount of time, we could rewrite the entire application. Just feed the whole damn thing into Claude, have it rewrite it, and come out the other end hardened. I'm over
security hardened.
Exactly. So I look at that, I'm going, okay, what you really need to do are, who are all the people that know your industry? If you're investing in a PE firm, I want to know who understands the dental industry, or who understands the chiropractic industry, or whatever it is in that company, because those are the people you're going to want, because they then feed back into the prompting of the application. So we need far less developers and far more people who are experts. I think this forward deployed engineer thing is a real thing, in that those are the people who understand the industry and can come back and actually tell the developers what it is that needs to be built.
We say expertise is a commodity, experience is not. It's about wisdom, not knowledge. I mean, this is transforming everything. And unlike the internet age, where like, you know, you thought brick and mortar places were going away. This one's different. The first brick and mortar to figure this out is going to kick ass, right? Because they've got all the capabilities to succeed. So.
Absolutely. I think, you know, that's why when people said that Salesforce was in trouble because it was a per seat company, I go, no. The reason that Siebel didn't survive what we did was because we had a distribution model that got completely disrupted. What that is not happening with Salesforce. Salesforce's distribution model is intact. It doesn't have to charge by seat. It can charge by other things. So it needs to tweak its business model, which it is and has through MCP and headless computing. The ServiceNow, Bill McDermott, you know, these are people and I know we work together. These are smart people. We had a very tough time overcoming the distribution problem.
It was the George Shaheen problem.
Well, yeah,
well, no,
that's a different story, Ray.
Right? Okay,
I don't want to get trouble with my former boss, you know.
Yeah. I see. But it's a distribution problem because it was no longer in the internet distribution.
Yeah.
Right? It was heavy manual distribution.
Right.
It was very different.
And the overhead of that was just too great. I mean, so Mark didn't invent CRM. We did that, but Mark invented cloud computing, or what we now call cloud computing, much more valuable, and that's why he's done extraordinarily well in many ways. So I think that and that's what I think is going to happen here is we're going to see a transformation. Right now, all the money's going into pick, shovels, and pans. The Anthropics, OpenAIs, right, et cetera. That's where all the VC money, chips, right? Oh, geez, 5 years ago, was anybody investing in chips? If somebody came into like our office selling, you go, hey, we got a really cool chip. We go, hey, we'll see. We're not investing. So
what about high bandwidth memory? Look at that. You would have totally ignored them.
Yeah, exactly. So today, well, why is that? Because that's going to be the infrastructure. That's going to sit as the foundation layer for this. But eventually, the real money is going to be in apps. It's probably going to be in vertical apps with companies that are experts in that particular vertical. And I think the sum of all of those will far exceed, even as vast as, like you look at the valuations on these companies, you go, Jesus, $1 trillion, more than $1 trillion. But if you add up the totality of all these apps, I think it's going to far exceed those.
I just unloaded most of my chip stocks this morning. So.
Yeah.
He's getting into SpaceX, I'm guessing. No, go ahead. Let's not get into that.
I'm trying to get there. But hey, we are with legendary Silicon Valley executive Bruce Cleveland, a VC, enterprise software person, but more importantly, someone who loves the craft of market engineering. You've got to read this book. If you're a founder CEO and have not read this book, you will suddenly wake up. There will be neurons flighting up. You're like, holy crap, I had thought about this, but never thought about it. And now I know why. This is why I have to go do it. Definitely catch the book. And of course, it launched this week on Amazon. Bruce, it's been wonderful having you on. Thank you so much for being on the show.
Hey, thanks you guys. Great to see you.
Thank you. Cheers. Yeah.
Wow. I'm reading that book like 3 more times, and actually literally going to be buying this for people to go read. So
well, yeah, category design. I mean, we've got Chris Lockheed, 13-time best-selling author on the show every year. Chris joins us, and yeah,
I just had dinner with them 2 weeks ago in
so
in a city I can't disclose because if I tell people who he is, then they'll know exactly what we're doing. So, but we get burgers and beer once a quarter in Los Gatos. Anybody ever wants to join us? You're getting a 500 level graduate course on like category design. I mean, it's like every time I sit down with them, I learn something new. So it's super. But yeah, I mean, it's been crazy. But yeah, go ahead.
Talk about a storyteller, pirate mentality, and yeah, he's been talking to us about category design for years.
So I think he's coming on the show in a few. He'll be on in
I'm sure
in a few more months. We'll have him back again, which is really good.
I'm sure. And yeah, Bruce, again, amazing to hear him talk about investing in companies before the product, before the pitch. It's pretty amazing. Okay, this is our cleanup hitter spot. You know, Sox aren't doing well, so I don't know if I'm using a baseball analogy makes sense. You know, we're excited about the Patriots, but this is where we get our Grand Slam athletes. And here we got Eric Ries, incredible author of Incorruptible. By the way, this is where I get to flex because I get proof copies.
Oh, yeah, look at you. That's the collector's edition.
Ooh, look at that. I do too, actually.
Anytime I get excited about a book, I'm like, you know, publisher, I need an early copy. Incorruptible, Why Good Companies Go Bad and How Great Companies Stay Great. Book came out last month. It's a #1 best-selling book. Thinkers 50 best-selling management book. You know, the list of accolades are too long. Our show's only, you know, a few minutes. Incorruptible. For decades, we've explained corporate corruption as a problem of bad actors, moral weakness, or isolated scandals, but the story doesn't match reality. Again and again, companies founded with strong ideals drift towards short-term thinking, extractive behavior, mission abandonment, often despite the best intentions. So Incorruptible argues that the failure is not primary ethical, it is structural. And that's what we're going to hopefully talk about. Over the last 2 decades, Eric's ideas about continuous innovation, long-term thinking, governance, and market reform have shaped companies building management practices. Eric is the creator of the Lean Startup Method and the author of several best-selling books, New York Times bestsellers, Lean Startup, The Leader's Guide, and The Startup Way. As a founder, Eric has put his ideas into practice with long-term stock exchange, Answer AI, which was an AI R&D lab, the Lean Startup Code, which teaches and supports the implementations of Lean Startup, and virtual legal service startup, and IMVU, where ideas that became the Lean Startup methods are forged. His podcast, Eric Ries Show, he talks to guests, including world-class technologists, thought leaders, and executives working to build profitable companies for long-term benefits of society. It's a privilege for us to have you here. Welcome, Eric, to DisrupTV.
Hey, thanks for having me. I really appreciate it.
Great having you.
Eric,
But the cover doesn't look like this. I just, you know, but this is just a flex with me showing that I've got your early proof copy. Go ahead, Ray.
Oh, no. I was reading it, and the thing that captured my mind was really this point where you say companies and organizations will always choose sovereignty over surrender. And I thought that was very powerful in that statement. What were you referring to at that point in terms of like how companies are reacting? Because I mean, we're about to hit the biggest change ever. And what I mean by that is we think a third of the Fortune 500 CEOs are about to get flipped because they don't have a playbook. They've never seen this before. There is no case study ever. We know that only 15% of the Fortune 500 are growing in double digits. And the average age of a board is sitting somewhere between 78 and 79 with no concept of the exponential scale of what's about to happen. So it's all these factors are coming together, about to go smack these companies in the head. And your book is about to kick it off. Tell us more.
Oh, well, yeah, exactly. So the way that we teach people right now to be a board member, to be a leader, even to be an investor, like, is driven by this set of so-called best practices that are really about structure. They're about strength. How strong is the company? And unfortunately, what today passes as best practices are a bunch of really weak, frankly, value-destroying practices. So the book is meant to demolish this era of so-called shareholder primacy and paint a picture of what could come next. First of all, by noticing that the way we're teaching people to govern these companies treats mission and purpose as an afterthought, despite the fact that that's where all the value is created. And secondly, by diagnosing this phenomenon I call financial gravity, this force that tends to drag companies down into mediocrity or worse, that is causing the average tenure of executives in companies to fall, the average lifespan of companies is falling, the average holding period of stocks is falling, and it's like the same graph 4 times. The average trust in institutions in this country is falling, all at the same time. So we got to turn this around, or as you mentioned, this disruption, this massive wave of disruption that is going to churn through all these companies is going to be extremely destructive.
So how do we change that, Eric? How do we help companies scale and grow and bring societal benefit and still be good? Still have, I know my company leader emphasizes core values of our company, and we have intense, spirited discussions about our core values. Everyone in the company is invited, but there's not only discipline and rhythm to make sure that if you ever meet an employee of my company and ask them the core values, they'll say, you know, trust and customer success, innovation, equality, sustainability, and the order matters, the words matter, your actions matter.
Absolutely.
How do we scale and stay good? How do we do that?
Yeah. So this is, I just want to be super clear. Most people think what I'm about to say is impossible. Okay. So I just want to be like super honest. Most people think this corruption is inevitable. And it's funny, the same people who say it's inevitable will also say stuff like this. For example, I was watching a lecture the other day. Someone's going this rant and they're like, look, the only companies that can sustain a multi-generational stay true to their values, resist the ROI thinking, resist quarterly pressure, blah, 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 are family-run companies. You got to have this company. And they're like naming family-run company after family-run company. At the end, they're like, oh yeah, and also Costco for some reason. It's like, excuse me, what? What was that? Costco's not a family-run company? No, they're actually a $400 billion public company. Like, aha, how interesting. If this corruption was inevitable, then there would be no exceptions. And yet there are these companies that have been able to stay true to themselves for decades or even centuries and also make quite a lot of money. No one would say Costco's not being successful. Yet Costco, every couple of years, Wall Street tries to attack Costco to get rid of its distinctive management practices because they're considered to be bad governance. So here's a funny stat. Since 2008, so think about all the public companies, all the things that have happened since 2008. It's a pretty reasonable data set. Yeah. Since 2008, companies that have been rated by a governance rating agency to have bad governance have outperformed the companies that have good governance. So what are we doing here? Who is this for? I think it's time for us to say, we know how to do this impossible thing. There's actually quite a lot of data, quite a lot of research, and really successful case studies that can show us the way forward.
Wow. I mean,
include, by the way, in your book saying that we define profit as maximization of human flourishing. What a powerful statement. Seems impossible maybe, but clearly.
Sure. Well, listen, we live in a time when capitalism and being for profit is under immense attack for good reason. I always ask people to think, like, imagine I told you your favorite restaurant got taken over by private equity. How do you feel? You're like, have you ever heard someone say, well, you know, since they have immense financial resources, I bet the food is about to taste a lot better. Not one. Of course it's going to get worse, man. If you look at what happened with the takeover of Panera Bread, not only did the food get worse, but they're being sued by 2 people who died. Like, this is catastrophically bad in company after company after company. Why? I think it's because, like, the public is turning against the whole idea of being for profit because we live in this era of exploitation primacy, where the ways you make money doesn't matter. As long as you make money, the collateral damage is completely irrelevant, including the collateral damage to your company itself. So if we define profit correctly as the maximization of human flourishing, first of all, we can reclaim for-profit as a noble calling instead of as an exploiter.
Yes.
And most of us who build things for a living, and I'm not just talking about entrepreneurs, but executives, engineers, product managers, artists, scientists, so many of us who have what I call the builder's intuition, is this idea that you should create more value than you capture. So when you make money, you should be leaving the world better off. And we all kind of naturally think, we don't often say it out loud, but we all actually think that there are better and worse ways to make money, and this is the good one. So I actually think part of what we're doing here is just getting people who are builders to have the courage to say it out loud that, no, I don't think all these other ways of making money are any good. No, I don't think shareholder primacy makes any sense. And I personally do not want my company to become a malign zombie one day. I want it to stay true to the values, the ethos, the culture, the mission that made it worth creating in the first place.
So let's talk a little bit about ethos, right? Because the PE firms are basically just harvesting, right?
Yeah.
They're coming in and harvesting, and but there's also a corruption factor that happens to that ethos over time, because unless you have a dual class structure where you have like super voting rights, and let's use the SpaceX example of what's going on right here. I mean, people are bemoaning the fact that he's got 82% control. People are bemoaning the fact that, the way the profits are set up, like they're paying off the first set of investors, and now they're opened up 30% for retail investors. But let's use SpaceX using the lens of what you're talking about. How does Elon perform in all this?
Well, I think Elon is a very complicated character, and he's done a lot of really
very
bad
complicated
stuff. So listen, and the SpaceX IPO is like a walking red flags in a trench coat. Okay. So yeah,
that's why I want to use this as an example. It is pretty complicated.
But the thing is, what's so interesting to me about Elon is he is like the ultimate wrecking ball to the whole theory of shareholder primacy. So I was at an event recently where somebody from his camp was talking to a bunch of governance and investment experts. And he was like, look, you say that these best practices are for shareholders, right? But Elon has made you more money than anybody else on this planet, yet you never vote with him because you think what he does counts as bad governance. So what is your justification for why you are opposed to the I get if we're not making you any money. Okay, that's one
self-preservation of ISS.
Yeah, it's an incredible indictment of this whole governance class who has made a fetish out of these practices. But the thing that's interesting to me is they not only have promulgated a bunch of ideological practices that don't make any sense, and just empirically speaking, do not make investors money. But worse, by making everything about money making as the standard, they have forfeited their own moral authority to criticize someone like Elon. I think they have no standing to go after him because they're like, look, if it's all about whoever makes the most money can do whatever they want and be freed of all constraints, then that's not a world I think any of us really want to live in.
Yeah.
So I hope that in some ways, the crash that is coming here, so obviously to me, will be an opportunity for a bit of a reset and a rethink. What do we really want here? Part of why Elon's companies have worked is because there is this mission-driven element to it. But also very clearly, I think he has been shaped by this financial gravity and has become more ruthless and less caring over time. I don't think that's an indictment of his personality, but rather that is the effect of what it takes to maintain your control in this system. As long as he's making money for his investors, he can pretty much do whatever he wants. So no matter how rich he gets, he always has to keep doing more. And I just know so many founders who are trapped in this system where the only thing that really matters is stock price go up. And it just leads you to a really dark place. Well, think about how many of these founders, how many of these really rich people, how many will their kids and grandkids be proud of that's how the family fortune was made? No. And so I just don't again, I always ask the question, who is this for? If the people who do it are winding up miserable,
right.
Why are we making all these moral compromises? Who really benefits from this? I think it's a mess.
So let me just make sure I interpret this correctly. So did he start as the mission guardian and he's no longer the mission guardian in your point of view? In your book, you talk about every organization needs a mission guardian. When you transform transportation, electrification of vehicles and interplanetary space travel and bringing, high-speed internet to the other 4 billion people that are still not on the internet as we speak today, it seems like the journey started as a mission-driven, mission guardian, purpose-driven work. But do you think that his companies now need a mission guardian? And maybe you can explain what you mean by that a little bit more for our audience.
Yeah. So the companies that endure tend to have this role in the company. Some entity or some person acts as what's called the mission guardian, someone who can interrupt the cycle of some PE firm shows up and says, I just want to if I want to do to you what Elon did to Twitter, the company has the power to say no. If you claim to be a mission-driven company, but you don't have this legal protection, then you're lying. You're not really a mission-driven company. You are mission hopeful at best. So the problem is, imagine I'm a political science professor, okay? And you come to me and you're like, I'm trying to figure out the best way to start up a new government. I want to build a new city-state. And you're like, great. Oh, I got hundreds of years of political philosophy to share with you. I can help you. Like, great. But I need you to choose between one of these two options. Okay. Oh, it's option one. Option one is whoever borrows the most money is in charge. You're like, what? Borrows it for how long? No, if you happen to borrow a bunch of money on election day, you can buy up as many passports as you want, vote as many votes you want on election day, and sell all the passports the next day. You could be a tourist. You don't even have to live there. You just show up, buy a bunch of, you'd be like, that's pretty bad. So what's option two? That's not going to work. What's option two? You're like, option two is despotic emperor for life and my heirs and assigns. like, that's slightly better. But honestly, can I ask you a question? Are those the only two options? Really? That's the best you could come up with? And like, honestly, in corporate governance, those are the only two options that we see anymore. It's like so ridiculous. Why? Why? In real life, we have lots of other options. And in fact, and this is what's crazy, in corporate governance, we have other options too, but they've been erased. Most people have never heard of them. When I helped Anthropic set up their governance, I remember when we were talking to investors about it, Anthropic has a two entity governance system. So instead of an individual person, instead of Dario having to be emperor for life to be the mission guardian, it has an outside trust called the long-term benefit trust. So it's like a set of trustees. They have the power to appoint directors to the for-profit company. When we were talking, a lot of people were like, ooh, it sounds like some radical newfangled thing. I'm like, not really. In fact, the German optics company Zeiss had this structure in 1887.
Wow.
So just because it's new to you doesn't make it new.
Wow.
And here's the crazier part, okay? Not only is this like a thing that exists in the world, like everyone listening has interacted with companies that have this structure, because everyone I know has eaten a Hershey's chocolate bar, or you've shopped at IKEA, you've taken a Novo Nordisk medication, or you have a Patagonia fleece, or you have a Vanguard ETF and you're a mutual. Like, we interact with these companies every single day that have this unusual governance structure. And what's so interesting is, take just one example, what's called the industrial foundation structure. This is the structure that governs Novo Nordisk and Hershey and companies like that. Companies that there's so many companies that have that structure that we have a data set for how they perform. And companies with that structure are more than 5 times more likely to live to year 50 compared to companies with a conventional structure.
Wow.
So not only is it not new, we have the evidence that this is better than the kind of 2 really crappy options we're all being offered in corporate governance every day.
So values create value. Values create value. 5 to 50. That's unbelievable stat. That's stunning. That's wow. Go ahead, Ray.
Yeah, I didn't want to not get the answer to what happened to Sol Price, Costco, and I didn't want to get the answer to Whole Foods. So I wanted to just fast forward a little bit and then tease the audience, because they're all going to want to read about it, as you know. So let's jump there.
You want to do Sol Price first?
Oh my God, I'm a FedMart Price Club fan. Like, I love Price
Club. All right. Me too. I grew up in San Diego, okay, where Sol was a local legend, but he's one of the entrepreneurial goats. I mean, honestly, like, yes. And yet his story is not that well known anymore, which I think is really fascinating. So I kind of feel like I get to reintroduce a whole generation of people.
I loved reading that.
Okay, so first of all, for those that don't know, Sol is widely considered to be the father of modern retail. If you want to understand how influential he was, when Sam Walton was thinking of setting up a retailer, he named it Walmart as an intentional tribute to Sol's company, FedMart. Okay, that's like, he's a real OG. Okay, so FedMart was a company with a very particular philosophy of business. Sol believed in being what he called a fiduciary to the customer. So whereas today we teach companies that their only fiduciary duty is to investors, Sol understood that there was a fiduciary hierarchy. It's funny, we were just talking about it in the context of Salesforce. Not only know what the values are, but know the hierarchy. So at FedMart, the hierarchy was this: customers first, employees second, shareholders last. The great Peter Drucker, by the way, he said it should be opposite. He said it should be employees first, customers second, shareholders last. The famous Johnson & Johnson, our credo, is doctors, patients, and nurses first, employees second, communities third, shareholders last. Are you noticing the pattern? Okay. Yes. So that was Sol's idea. For example, if you tried to undercut FedMart on price, Sol would put up signs inside his own store telling customers where they could get the discounted thing that you were selling. Wow. He didn't care where you bought it. He's a fiduciary, meaning a fiduciary is someone who puts another's interest before their own. So he's like, whatever is in the customer.
Money's in the membership, remember?
Totally. And he had a membership model, and it was just, he had what we call an aligned business model, meaning he could only make money when the business model aligned with, supported the mission. Because if people canceled their membership, then there was no money. He practiced capped margins. Every item was marked up 14%, no more, no less. He paid above market wages. He ran that company the way we all wish every company we interacted with was run. He, of course, made a fortune. It was very successful. He took the company public. It was great. For 20 years, FedMart had an almost unprecedented run. So you want to take a guess? Were the investors satisfied and happy that Saul was making them so much money that they let him alone to run his business? Of course they didn't. They always wanted more, and they always wanted more best practices. Everything Saul did was a deviation from what they thought would make them more money.
We don't understand it. Why is it so different? Why can't
why
you?
why can't, you know? And
why
they were
can't
like,
you do
look,
the same?
why are you paying employees more money than we have to pay them? And think about that. I get that question all the time. Whenever I do anything employee favorable, people are like, you know, this is more than you have to do, as if I would only ever want to do the minimum for my own employees. Like, why? It's crazy to me. Anyway, Saul didn't understand that. He was very stubborn. And so one day in 1975, after Saul had been running this company for more than 20 years, he comes to work and he can't get into his office because they have changed the locks on his door. Saul doesn't work there anymore. Okay, the board got what they wanted. Saul was ejected. He could do nothing and just watch as they turned FedMart into a conventional company. It took them only 7 years to drive it into bankruptcy. 7 years to destroy what he had built in 20. Now, that should be the end of his story. Saul was a late-in-life entrepreneur. He had a whole career as a lawyer before this. So he could easily have retired. He was a wealthy man already. He could just been like one of those people that goes around talking about how capitalism sucks and investors are terrible and whatever. Oh, no. Oh, no. He took only 2 weeks off. I love this detail. He took 2 weeks off, and then he leased the office upstairs from FedMart and started over. He started a new company that he called Price Club. When I was a kid, Price Club was like the place that my family shopped. But today, Price Club is not well known because of something that happened next. See, he wasn't the only person pissed off about what happened to FedMart. He had actually hired a guy as a stock boy named Jim Sinegal, right out of college.
What? Really?
Jim Sinegal worked his way up from stock boy to executive at FedMart. Saul was a big believer in hiring and promoting from within. And he quit FedMart in protest when Saul was fired. Ultimately, sometime later, starting a new company. His company and Saul's company a few years later would merge into a combined company that they called Price Costco, but we just call Costco. So I've just told you the deep cut origin story of Costco. Costco today combines the ethos of Saul Price, the capped margins, the fiduciary of the customer, all that stuff. But the reason it has its sovereignty is that it is also protected by a governance fortress. Costco routinely gets the worst possible governance scores from these governance ratings agencies, even though it is one of the best performing stocks in the entire public markets.
Unbelievable.
And that's really the formula to build an incorruptible company. You need the ethos of Saul Price and the structural integrity of Jim Sinegal.
Eric, why did you write the book? At what point, what was the experience? What was the person? What was the environment?
Yeah, I mean,
you're a multi-best-selling, you're a multi-best-selling author. When was this idea born?
You know, I've seen a lot of the good of our industry, and I've seen the dark side up close. As the kids say, I've seen some things since Lean Startup was published in 2011. So this has been brewing for me for a long time. I've just felt like there's something wrong. There's something rotten in the state. You know, it's like there's something wrong with all these companies being destroyed in the name of profit. FedMart was destroyed in the name of profit. Cedars was destroyed in the name of profit. Blockbuster was destroyed. All these companies destroyed in the name of profit. Why? All these private equity destructions, all these companies where after the company goes public, they just kind of lose that special spark. Whatever happened to Don't Be Evil, right? Like there's just something wrong.
Eric,
and does it bring you joy that a company like Anthropic comes to you and says, help us figure this out? I mean, it must be immense joy, just given all the craziness that they've gone through and all the hardship.
Oh, I'm immensely proud of them. Look, are they perfect? No, people. We live in such a polarized time that people are like, "How can you call them perfect when they've done this thing wrong and that thing wrong?" Look, I'm in the settlement. They trained on my books without my permission, so they're not perfect. But the fact that they act with integrity it matters to people, and I think how lucky we are that at least one of these AI labs is structured in this way. I don't think their courage is a coincidence. I think it's directly related to this structure. So,
and the market is going to reward them when they go IPO. Second, maybe sure to SpaceX. I mean, this should be a great tangible evidence of your work, your narrative, your thesis. because the company that you help guide.
Well, listen, you're making it sound like I deserve all the credit here,
Well,
and I really don't. Okay, I was a very bit player in this story. And listen, when I started writing this book, Anthropic was not that well known of a company.
Oh yeah, sure, I'm sure.
So I didn't know, to say that I somehow knew this was all going to happen. I mean, come on,
I suspect you had a clue. Yeah.
But I will say the thing I'm really proud of is this company is under more pressure than I think any private company in history. I mean, they are the underdog of underdogs, and they have been they're being attacked by sovereign nation states and big company competitors, and they're under every kind of pressure you can imagine. There's so much money involved. Think about the greed that must be being activated by this thing. And yet so far they have managed to keep their wits about them. They've managed to keep their integrity. Will it last? Will they be able to do it in the company? We'll have to see. It's only time will tell, but so far the early returns seem very promising.
Eric, you hit something that's so deep. Conformity for the purpose of profit is the source of evil, disintegrating the trust in our industries and our institutions today. I don't think I'll remember how I said that, but I'm just saying, I'm trying to distill what you're saying, and it's pulling at the tug of the value system that we have, and it's basically perverting the value system for profit. And that's why people are upset. It doesn't matter what party you're in, what your political beliefs are. If you have that genuine sense of good, you know that this is wrong. And you don't know how to quantify it. You know what's going on, but you basically are just watching it disintegrate in front of you. And almost every institution has gone through this. And it's literally like people said, hey, which one's left? Let's go after them. And there's a perversion of that with capital to go do it.
One of the things I wish someone had told me as a leader earlier in my career is that the more successful an organization becomes, the more valuable it becomes as a target.
Yes.
So since trustworthiness is the most underrated and valuable asset in the world, if we stockpile it, eventually someone's going to try to steal it from us. What do you expect?
Yes.
So we got to learn to protect it.
This is amazing. Read the book, folks. Eric Ries, author of Incorruptible, Why Good Companies Go Bad, How Great Companies Stay Great, and more importantly, keeping the perversion of trust out of the markets for profit. This is amazing, dude. We got to talk more.
Thanks, guys.
So,
Thank
you so much. We'll see you in the green room. Wow.
Yeah. I mean, Bruce and Eric. Wow. Yeah.
We went
category market, as Chris Lockett would say. Two pirates, two
Chris
categories.
Lockett is watching the show. There's a comment from him. Here he goes.
Oh, come on.
Love Bruce Cleveland. Yeah. Look at that.
Yes, you got a lot of
legend.
love.
He's legendary.
You got a lot of love for. He referenced you 2-3 times. That's pretty awesome. It's so great to have multiple OGs either as guests or viewers. What a privilege. This is why you and I spend Friday afternoons. Yeah. We're approaching 11 years of Friday afternoons, or early mornings for you, afternoon for me. We got both coasts. You got Cupertino and Boston, and the last two guests, and certainly the folks that watch the show, give us all the fuel and energy and inspiration we need, because we all, one recognition for both you and I is the smartest person in the room is the room.
It's the room.
It's the room. So we're grateful to have incredible guests expand our minds. Next week, Patricia Martin, author of Will the Future Like You? Reflections on the age of hyper reinvention. I hope the future will like us, Ray. I hope so. We'll hopefully have Patricia help us figure that out. And then we have Tom Rath, author of What's the Point? Turning purpose into your daily superpower. So we have a great producer here, combines big thinking, best-selling authors.
The reflection you'll have for the summer is going to be amazing.
Yeah, exactly. Will the future like us, and what's the point? That's next week's show. If it's Friday, it's DisrupTV. Thank you for recommending guests to us. Thank you for getting us early copies. Both of these are proof copies, which gives us enough ramp to ready ourselves for extraordinary guests. And if it's Friday, it's DisrupTV. We'll see you next week.
Eric in the green room.